Make sure you guys get your free stocks from Moomoo. Link down below. Deposit at least $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. And on top of that, yes, there's more. You also get a free share of NEO. So use that link, deposit $100, get your money, and now let's break down the markets, 3 oversold stocks I'm looking at, and overall what I'm looking to do in these markets. So sit back, relax, take a sip of your watered down Dunkin' Donuts, guys. That's what I got right here. Some Dunkin' coffee. And let's get right into the video. So right now, it's almost 2 p.m. on the East Coast, and we have the S&P 500 down 2.5%. Dow's down, or not down. Jesus, guys. What am I saying? I mean, we're up. We're not down. We're up. Dow's up 2%. S&P's up 2.5%. We have the Russell up 2.75%. NASDAQ's up over 3%. We have the VIX down, so the VIX is down 7%. We have gold down 2.5%, and silver is down 3.3%. So big sell-off in the metals today. Oil's down. We have the VIX down, and we have equities completely ripping. So we got a lot to break down, and first we got to break down SPY and Triple Q and see what is going on again, as it's almost 2 p.m. here on the East Coast. So right now we're failing at the 180 moving average on this 20-day chart. Looks like as of now the downtrend is continuing, and this is despite the fact that we broke out of the highs from yesterday. If you guys take a look here on the 5-day 5-minute, we did break out of the intraday high from yesterday, which was right around 427. Today we got up to about 428, 50, 60, something like that. So we did break the high out from yesterday, but again, overall on the 20-day chart, we're still downtrending, and we're under the 180 moving average, which has been resistance over the past couple of weeks. So I don't think we're going to really see a huge shift in momentum until we break above this moving average, this downtrending trend line. And honestly, guys, at this point, 435, 440, that is where we have to start breaking out of for this to really start building momentum. And we're just simply not seeing that quite yet. And at this point, this could be another sell the rip opportunity. It could be a bull trap. And by the looks of it, with the volatility we've seen, even though volatility is dying down today, it might spike back up. By the looks of it, we might go down and test the lows again. It's very much still in the cards, and I don't really think that we're reversing 100% to the upside quite yet. And pretty much everything I just said applies to Triple Q. Triple Q, yes, it's seeing a nice relief rally today. It's up over 3%. It broke out of the intraday highs from yesterday, but it's still in a directional downtrend under the 180 moving average, which we just simply got to break. I mean, we got to break 340 at least on Triple Q for this thing to start reversing, and who knows if that even happens. It's just way too early to tell at this point. So at this point, I don't want to give you guys financial advice because I'm not a financial advisor, but I'm kind of looking at this as a sell the rip opportunity. That's just the way I'm seeing it, and you guys can disagree with me all you want. Please let me know in the comments, and by the way, if you haven't done so already, hit the like button and subscribe. It really helps me out in the YouTube algorithm, and I do appreciate all of you out there watching as always. Now, let's talk about some stocks. We have a couple of stocks that I believe are a little bit too oversold, and they're setting up pretty nicely. Number one, which I actually own, full disclosure, I own Intel, ticker symbol INTC. It's stock number one. This one's down about 18, almost 20% from the recent highs that we hit. When was this? Back in the middle of, January. And this is crazy because we all know that we've seen a huge rotation from growth into value. That's what's been going on these past many months at this point, right? We had, oil stocks going up, utilities, and Intel, it's not following suit. This is one that I thought would have done a bit better than it's been doing here in the beginning of 2022. But either way, I'm holding on, guys. I'm holding on, and I still think it looks pretty solid regardless of the fact that it's down a little bit here. It's down about, 10% in 2022, 10, 15, at more like 10, 12%. As of now is what it's down. So I'm still liking this one. We're noticing an inverse head and shoulders on this 4-hour chart. Left shoulder head, right shoulder. If I zoom in a bit, you guys can see that. Now we just need to break out of $48.50 to about $49. That is a big spot right now for Intel because, as you all can see, we are holding the neckline. The neckline's right around $47. So the fact that we're holding that, that's a good sign for this pattern to play out. Now we just need to see the breakout. I mean, that's point blank period what we need to see. We have to get that right shoulder to start gaining some steam. And I think if this breaks above $50, that is where it's really going to start getting hot. So again, I'm long Intel. I'm not, trying to dump it next week, next month. I do have a time horizon, a longer time horizon for this stock, and they do pay a nice dividend, and I've gotten a couple payments. So, hey, I'm getting these dividend payments. They pay about a 3% dividend right now. I've been selling covered calls on Intel, which you guys in my Patreon know. You know about that. Check that link out down below if you guys do want to join the Patreon, and their PE is still fairly reasonable in my opinion. 9.8 trailing 12-month PE as of right now. So I like Intel. I haven't bought any more in a couple of weeks, months actually at this point. But who knows? Maybe I will add to it here in the near-term future. Another stock that's down a lot is Clorox, guys. Ticker symbol CLX. This one's down 0.3% today, which is not that bad, obviously. But over the past couple of months, weeks actually, take a look. Just in the middle of January, less than 2 months ago, this stock was $185. Now it's at $138. It is down 25% in the past almost 2 months, which is insane. And if I show you all this chart from when COVID was crazy, it was at 240. That was back in July 2020. Now it is down about 42% from all-time highs, well in a bear market. And you may be looking at this chart, this 3-year chart, the yearly chart, and you may be like, Stas, this chart looks like crap. And I do agree with you. It doesn't look great. But if you pull up the max chart, which you guys should do this, you're going to see something that looks pretty good. This chart looks pretty good if you pull up the data price action from the 80s. I mean, what we're noticing here is it got into a bubble. That's just what happened. It got into a bubble in 2020. Everybody was out buying Clorox, the products, and people were buying the stock as well, clearly. I mean, this thing got way overvalued. It blew up. It almost doubled up. If you look at where it was in October 2019, it was sitting at $145. All right, maybe it didn't almost double up. But from $145, it went to $240. It ran up 60% in just a couple of months. You're telling me that that's a reasonable move or a rational move? Absolutely not. So at this point, we gave back that entire COVID run. Now Clorox is down, like I said, 45% roughly from all-time highs. We gave back that entire run. We are under where we were before COVID. Before COVID, like I said, the stock was at 140, 150. Now we're at 138. So I think there could be some more red in this stock, but ultimately, you guys might see where I'm going with this. It's probably going to go down to this 180 moving average on this max chart, which it has not gone under in about 20 years, even before that. So at this point, I think Clorox, although I'm not rushing and loading the boat on it, I think 115, 120, 125, maybe even 130, this general $20, $30 window we're in right now, I think this could be a nice buy range, especially if you have a longer time horizon. If you're looking at this from 2 weeks out, it's probably not going to work out. But if you have maybe 6, 9, 12 months, it's opening up as a pretty nice play right now. And on top of it, it pays on top of the chart looking decent, it pays a 3.3% dividend, and the trailing 12-month PE is a 70, which doesn't make sense to me. It's got to be because of declining earnings per share over the past couple of months or quarters. Let's see here. That's got to be an accounting thing or something. I have to dig a little bit deeper to figure that out. But it looks like EPS has really come down these past couple of weeks, quarters, months, the past year in general. So lower EPS, just take the price. 138 divided by EPS. That's how you find the price to earnings. It's 138 divided by what? 65 cents, $1. I mean, the P is going to be very high, but I'm not looking too much at that. I'm looking more at the dividend yield, the free cash flow, and so forth. Clorox looks pretty decent, so I'm keeping an eye on it. Another one that I'm looking at is good old Harley-Davidson, guys. Ticker symbol HOG. This stock is down a decent amount over the past couple of weeks, down about 12% in correction territory, but today it's up 5%. It's starting to make a push towards a main resistance on this chart, and by the way, this is the 4-hour chart. If I zoom in a bit, you all can see $40 is a big level of resistance. We failed there back in October, November, late November, even in the beginning of 22. And then they reported pretty strong earnings. If you guys remember, the stock shot up to the mid-40s, pulled back to the mid-30s again. Like I said, it went down. It's currently down 12%, but it was down as much as 18%. Now we're getting that 5% green day. So I'm going to put my alert at $40. If HOG, also known as Harley-Davidson, oops, knocked the mic there, ticker symbol HOG. If this breaks $40, let me show you guys this. We might see this triangle play out to the point where, hey, it might run up another 8-10% to test that high from after the earnings report. So I like this one. It's oversold. It's trying to break out. If it does, we might see that move to the mid-40s. And with that being said, guys, those are 3 stocks I'm looking at right now and a breakdown of the markets. If you all enjoyed this video, hit the like button, subscribe, drop me a comment, and feel free to join my Patreon if you all want my real-time buys, sells, call-outs, morning videos, everything I'm doing, guys, in real time. I post on Patreon, and you get more access to me, plus private Discord access. That, again, is linked down below, or you guys can go to StasserFest.com/Patreon. And don't forget to get your free money, guys. I'm telling you, it's free money. Use my link down below. Deposit at least $100. You get 5 stocks, up to 5 stocks from Moomoo, each up to $3,500. And on top of that, you get a free share of NEO guaranteed. So you're guaranteed at least $20, $30, $40 just using that link. I'll see you all in the next video. Have a great one. Thanks for watching again. Peace out.